First thing, are the people you do business with. Now, the people you do business with are in folds. They can be your vendors, which are your suppliers, of which when you start owing them, they become payable, right? They can be your receivables, your customers, which are the people that buys from you, of which when they start owing you, they become receivables of debtors. These are the people you do business with. Also, they can be the bank. You're going to be transacting business with the bank as well from time to time. And these bank people they'll be having their account set up as well in your QuickBook. Then also, they can be your employees, the guys you employ to do business with you in the business. So all these people are part of people that run business with you inside this same company. And also, the second stage is to add the product and services you offer. We are going to be classifying our products in this aspect when we add our products to this. Then also, we are going to be adding our bank accounts. The bank account you're working with. If you're working with FCMB, if you're working with Sterling, if you're working with UBA or MoneyPoint, as the case may be like that, we're going to add every single bank account that your business transacts with. So first thing first, let's start with the people we do business with. So we're going to be creating our customer base. We're going to be creating our supplier base, that's the vendors. We're also going to be creating our employees. So let's start with that. So it has given you, QuickBook will give you options to enter. Probably you must have written all these informations on Excel and you want to import it into QuickBooks. There's a space for that, for your customer base, for your employee base, and also for your vendor base. But for this thing, we're going to be inputting them manually, one after the other, inside the QuickBook. So click on this space from Excel. So we are going to manually enter this item on Excel in our QuickBook. So that's the third option. You click on continue. Now, this is how it's going to look like. It has separated the three people we do business with. So we are going to enter the names of these guys. We enter their names, we enter the first and last name as well, their email address, their phone number. These are the information that we require from these guys. Their contact, their city, their state. So we might not really enter those city state things. We just work with the phone number, names, and address, or probably just phone number and name. Just two. So that's what we work with. So for these guys, the name. Let's start with the customer. So on the customer section, you click on this angle. If you're entering a customer or if you're entering an item, click on which of the drop button belongs to the item. So for this customer, you are clicking on this aspect. Then the names. There's a place I wrote most of the customers' names. So these are employees, these are products, these are customers. So these are our customers. Why these names are looking like an estate name is because most of the customers for a blunt industry should be an estate that's into construction of building. So they are the ones that will be buying most of their products. So we're going to copy this, paste it, right? The phone number, you can just write any phone number of our choice, 070-4545-4545. Address, any address of your choice you can write. We can come back to all these ones so we don't waste our time. So let's assign like 4. Let me see how many customers base we have here. 1, 2, Okay, let's assign 2 customers to this. Let's just make use of these 2: Urban Build and Alpha Engineering. Also, this will be for customers: Alpha Engineering 081676767. Right, so we're done with customers. So for vendors, the same thing. We're going to be assigning 2 names to vendors. It is assumed that our vendors are Dangote Cement. You come to vendors section, click on it, enter this name, enter any number. Same thing applies to the second vendor. I think we should use one of these. Oil. We enter any phone number. Alright. So the next item is employees. In the business, there are people that work as management staff, though those are going to be our major employees we're going to work with. So let's assign 4 employees for this company. The first employee is going to be James Dixon. He's going to be the account manager. So any number. The second employee will be Mabel Solomon. There's a section where we edit these employees with their portfolios. 090. Okay, so they need the first name, they need the last name, they need the first name, they need the last name. Sorry, Mabel Solomon. And on this section, their email address. Let's assign an email: James Dixon at gmail.com. There was an issue that occurred, so we're going to be creating them from here. See, this is how the dashboard looks like on the QuickBooks. So on this dashboard, we have vendors section. This is how accounting moves. You enter a bill, you pay the bill, right? On vendors are your suppliers. It's either you buy the products from them on credit or in cash. So when you're doing that on credit, so you enter the bill, they will enter a bill for you. At the end of the day, you will pay that bill. So that's the movement for vendors. Now on customer base, customers are people you sell to. This is how it moves. Sales order. These customers are going to be coming with what they want. This is the other aspect now. They want to buy this. They've given you their items or what they want to buy. Right? Now you move to estimate. You move to calculating what it costs on these orders that they are giving to you. At the end of your estimate, you create an invoice for them. So this invoice is like you telling them to pay. Right? This invoice is like you telling them to pay. So they are liable at that point if they sign this invoice to pay for that product. Now, most times when you create an invoice in accounts, especially in QuickBooks, those invoices are going to be taken to receivables until payment is made. On this place, it's going to automatically take them to receivables. So those customers are going to be liable to pay you. So at the end of the day, if they pay you, it comes to receive payment. It clears. The implication of that is that it's going to clear the receivables and it's going to add to your bank account. So the bank account that is receiving that invoice will be debited. Why the customer's receivables account that was created based on this invoice will now be credited. So you're going to see how everything will move in QuickBooks at the end of the day. Then after everything, after the customer makes payment, you can create a receipt here for them, right? You can create a receipt here for them on that. Now, after creating receipt, that's not still the end. There are cases where some customers might not like the product after buying it, after paying for it, and they will need a refund. That's where refund comes, right? That's where refund comes in. Pay what they are being owed. So on this aspect of invoice, this credit is linked with this invoice. So when you issue invoice to them and you receive payment above what they are going to pay, it becomes a credit to them. So you are, as a business, you are liable to that customer to either refund them back that credit, or the customer will use it to buy another product. That's how it works. So at the end of the day, after your invoice and your receipt has been created, it automatically goes to deposit. This deposit means it has not landed in the bank account yet at the debit side. Normally when you receive money, it goes to the debit side in your cash book, right? It has not landed in this QuickBooks debit side yet until you go to this place and record deposit. So we're going to do an illustration now, and you see how the movement goes. Then after, if there's any discrepancy for bank reconciliation statement, we come to this reconcile. Probably there is an item of account that you have not, that the bank has not recorded, that you have not recorded on your QuickBooks, but on your bank statement or on your bank account, it has already been recorded. So it's not causing your bank account not to reconcile with the QuickBooks. So on this place, we're going to reconcile that as well. Then this chart of accounts for the company, it lists every single account. The five classes of accounts: the income, the expenses, the liability, equity, and asset, right? So this is where you're going to find every single thing in this chart of account. Let me open it and show you. It's going to classify every single account so this chart of account is actually peculiar to the nature of, or the sector that the business belongs to. Now for this business, which is a manufacturing business, it will give us a chart of account that suits it, right? That suits it. So you can see your income, you can see your asset, your equity, your liability, and your expense. So these are the chart of account. When we start putting figures, most of all these things will be balancing. So it's like a trial balance for your QuickBooks, your business. The items and services are your product. If you want to create a product, that's where you find it, on items and services. So you can create a product there and assign a unit price to it and a quantity. So these items and services will help you monitor your stock in case you're going out of stock for your business. So you know what you're starting with, and you know what you sold, and you know what you're left with, right? That's how it works. Then for checks, other checks. Now, it has its own separate checks, but those kind of checks you can actually not cash it on any commercial bank in Nigeria. So it's just for the app itself. So you can actually use those checks to make some crazy payment inside this and others like that. Then intercompany transaction. So when you're having a company that's a subsidiary within a particular company, and both of them are actually linked together on the same book, and they are doing some transaction between themselves. So this is where you're going to be doing your records for that, right? And also calendar. Now let's start with creating our vendors first. So we're going to be creating a vendor for this business. You click on vendor. Vendors are your suppliers, remember. Now for this business, the vendors we had, we're still going to maintain it. We have where is that vendor? Okay, we use these two vendors, and this is the amount in their opening balance. Dangote Cement. And so at this point, to start creating your vendor, you right click on this and go to new vendor. When you click on new vendor, it will give us a field where we fill all the information for these vendors, all the information that are required for these vendors. It's going to give us a field. So first thing first, the vendor's name. That name we copied We'll paste it here. Opening balance. This opening balance, it shows if we are owing them. How much did we start with? Right? Probably as their vendors, we bought cement from them, and I assigned a figure to it, 500,000. This is it. So it's going to be our opening balance, 500,000. Let me tell you the implication of this. This 500,000 is going to reflect in your supplier's account. It's also going to have effect in your accounts payable. So this is how your account payable will start with 500,000. And let's assume that this company started, we bought we made this stuff with Dangote in let's say in last month, on the 4th of last month, as a business. So 500,000. We come here, we still write the same thing. Phone number, assign phone number. Email Dangote plc at gmail.com. So those stuff we were entering on the other section, this is the same thing. So it does not change. So states, cities, Suleja, state Niger, zip code 190. I've forgotten that zip code. 910101. 910101. Country Nigeria. Note, leave those ones blank. So this is the shipping address. Now on this payment section, we are not going to fill anything there, since we cannot use the check on QuickBooks to make payments, right? I cannot use the check to make exact payment. We're going to be using our exact bank check, so we're going to leave it blank. Tax settings. Now, and is there any VAT? Is there any VAT applied to this particular vendor? If there is, then you have to fill it, right? You have to fill it. So most of all these things are also applicable. Now, account settings as well. So for this tax settings, we're going to fill it on this section. We're coming to that. On this account settings. Now this account, where is this book? Where is this purchase of cement going to? Which account is receiving it? Now it depends on the nature of the business. If the business is producing blocks, definitely any cement it buys from deck manufacturing. So on this section of account settings, it is the posting now that matters. So now it depends on the nature of the business. They are telling us which account is receiving this. Now, this is a supplier's account. We are buying from Dangote, and what we do is that we produce blocks. So what are we buying from Dangote? We are buying cement from Dangote. So definitely Dangote forms part of our direct cost. Yes. So which account received this now? It's going to be a cost of sales that this will be posted to. It's a direct cost item, right? So this is the only cost of sales we can find. Free freight and shipping costs. We can't use that. So what we need to do is that we need to go and create a new cost of sales and call it so if you are creating it, let me go back for those that didn't see what I was doing. If you're creating a new cost of sales, you click on this item, you scroll up, you come to add new.
Yes, go.
All right. So on this cost of sales, like I said, let me go back again one more time. On this cost of sales, you come to this section, scroll up, click on add new. Once you click on add new, we're going to be creating a cost of sales for that item. We're going to be creating a cost of sales for that item. So to get the cost of sales, you are going to click on that other account expense. On this other account items, you're going to click on it. You click on cost of goods sold. Um, um, Cement. Let's call it cost of cement. Right? Sub account, no, it's not a sub account of anything. Now on this description, you cannot describe how the product will be. You can just write this represents the cost of cement bags purchased from vendors. Right? There is, you save and close. Automatically it has created that item for us. So what this will show you now is that whatever items, whatever movement we have here on this account for Dangote Cement is going straight to this cost of sales. If Dangote Cement, if we decide to make a bill, so he gives us a bill, and either way, if we pay or not, if we pay, it still comes to this cost of cement. If we don't pay, it still comes here, but it's going to be classified under two methods: accrual and cash basis. Right? If you're good with the basis of accounting, you understand what I'm saying. So it's going. Second question that comes on your mind is this account for Dangote, which is the vendor's account, which account on the event of owings, which account is going to be affected? If you know the answer, just drop it on the. So it has gone to cost of sales as cost of cement. So which other account are we going to be having that items to be posted to?
This payable account.
Very good. So it's going to be going to the payables, right? It's going to be going to the payables account. So you don't need to come here and write. You don't need to come here and write payables account, add payables, and no. This item already, this vendor is already a payable. So it's just the account that is going to be affected after each items has been made for this particular product is cost of cement, which is cost of sales account. So at the end of the day, we can go to additional info. Vendor is a supplier to us, right? So we're going to click on that and okay. So automatically it has created Dangote for us. Now let's check what has happened to this account. Let's check what has happened to this account. A bill for us to pay amount 500,000. We are owing Dangote 500,000. Now let's check how our book will look like. Come to the chart of account. You're definitely going to see 500,000 in account payable. Are we seeing it now? Are we seeing it?
Yes, sir.
Good. So we're definitely going to be seeing 500,000 in account payable. Now, when that payment is made, this 500,000, it depends on the amount that was paid. When it's made, it's going to appear on the cost of cement. This cost of cement here, you're going to see the figure here as 500,000 when it's made, when the payment is made.